Hey, what's up, guys? Houston here. Look, if you haven't raised over $50,000 doing Instacart, you're doing something wrong. Here, let me explain to you so you understand what I'm saying. You have Tom and you have Sam, right? So here's the situation. Tom, he has a job, right? So Tom says, well, I want to make an extra $500 a week. So he's making an extra $500 a week doing Instacart, right? Now, Tom is taking that money and he's putting it directly into his pocket, all right? Now, Sam also has a job, but also Sam wants to make $500 a week, all right? But here's the thing about it, what Sam did. Sam decided he wanted to start it as a business, right? So what Sam did, instead of taking this $500 and putting it directly into his pocket, he set himself up as a business and he got an EIN number, all right? So when he got his EIN number, the next thing he did was open up a business bank. Here's the thing about it, because there's more to it, that why Sam is going to get closer to $50,000 with Instacart than Tom, right? Now, here's the situation. Think about it like this. Sam, he started the business, he got the EIN number, he opened up the business bank account. Now, he went further, he chose the right business bank account. Now, I always tell you, the right business bank account matters. So where Tom heard that Sam was opening up the business, so he decided he was going to open up a business and get an EIN number too, all right? But here's the thing about it. Tom decided he was going to go to the credit union, right? He went to the credit union, just say he went to Navy Federal and opened up his business bank account and start putting the money in his business bank account. Now, Sam, on the other hand, he decided, well, I'm going to either go to Chase, Citibank, or Capital One to open up my business bank account. Now, why? The reason that Sam decided to open up his business bank account with them because they report to the Business Credit Bureau. Most of the major banks, they report to the Business Credit Bureaus, and Chase, Citibank, and Capital One are your top financial institutions. And they report to Equifax, Experian, All Business, Financial Exchange, and then the information shared with Dun & Bradstreet. All right. Now, here's the thing about it. Tom is making the same amount of money. He's making the deposits into Navy Federal, but Navy Federal does not report to the Business Credit Bureaus, right? So they don't report to the Business Credit Bureaus. So Tom is not building up his business credit. Sam is building up his business credit as well. Now, here's another thing. Sam, he took it a step further. He decided to open up a pay business account. Now, some of you all may ask, why would he do that? How does that have anything to do with in terms of Instacart? Well, here's the reason why. When Sam decides to take his money, instead of directly depositing into his business bank account, he'll deposit it over into the PayPal business bank account. The reason that he's depositing over into his PayPal business bank account is because they will be able to give him a loan without a credit score. So PayPal will give him a loan. So then the money that goes from PayPal, he'll deposit over into his business bank account, which will report that information to the business bank rating. So now where PayPal will give him a loan, a line of credit, and a business credit card. All right. Now, here's the interesting thing about it. Most people think that Navy Federal is good for business, but the thing about it, because they don't report to the business credit bureaus, it doesn't do anything for your business transactions. This is why more people are having issues with trying to get funding. Now, one of the good things about Navy Federal is that they will give you funding without any revenue in the business. So because you don't have any revenue in the business, they will give you funding. All right. So that's a good thing about it. But beyond that, you're going to be stuck at whatever they give you. Right. Now, here's another thing. The business structure that Tom had, he had an LLC. Right. So he has his job. So the income is going to be married. So the income that he makes through the LLC, when he gets paid that $500, he has to count that as income with his regular job. And so that could possibly increase his adjusted gross income, right? So that means that he could possibly pay more taxes. However, Sam, he decided that he was going to set up a corporation, all right? So Sam would come to a guy like me to set up his corporation. Hint, come to a guy like me. Now, here's the thing about it. Sam decides, okay, because of this here corporation structure, I have more fringe. I probably misspelled fringe benefits, so please excuse the spelling. But at the same time, he has more fringe benefits, all right? I think it's like that. But many of you know what I mean, all right? So in terms of him having more fringe benefits, all right, so what ends up happening, like he may have an extra types of insurance under the company, all right? Then he may set up him a 401k or IRA. Can you do it with this? Yes, you can. But with the corporation, you have more fringe benefits, all right? Also, here's another key that people don't know. With the corporation versus the LLC, financial institutions like the bank, they look at you as a growth company, all right? So they look at you as a growth company if you're operating like this. When you operating as an LLC or DBA, you're looked at as conservative. They look at you as conservative, not a growth company. So they will give you funding, but you're kind of going to not get as much funding. All right. Now, here's the thing about Sam wants to raise more capital as well as Tom. So here's the thing about it. Sam would not start with Chase Citibank Capital One to start raising funding, like his business credit cards and stuff like that. What he want to do, he want to go to his tier lenders, all right? So your tier 2 lenders are going to be like your community bank and your regionals, okay? So that would be like your Truist, right? So those would be like your tier 2. These are your tier 1. The reason that you don't want to start with them for his business credit funding, because when you just have a new relationship with them and you don't have high deposits and stuff, they become very conservative, especially if you have challenging credit or you don't have at least a 680 or higher. Now, would the tier 1 lenders give you more money with a 660 or something like that? Yes, they will give you funding. Okay, they may grant you with a credit card, but it's going to be very limited. However, if you go to a tier 2 institution with a 680 or higher credit score with deposits, and you also want to open up 3 different institutions as well, they will give you more money. They will give you higher limits than the tier 1. All right. Now, going back to Tom, he started with a tier 3 institution. All right. So he started with the credit union where he didn't have to show any revenue, and they had approved him because of the relationship. Now, when it comes to relationship, when trying to get funding, there is 3 things I always tell you to do. All right. Well, actually, there's 4. All right. So when you go into a new institution, you want to have 4 things in place. You want to have a regular personal account, a savings account, a CD, and then your business account. All right. Now, here's the thing that most people don't understand. Why the CD? The CD is so that you want to show them that you want a long-term relationship. Now, many people say, well, how much? Well, you can either start with their minimum. Most banks, they probably have like a $500 CD for 12 months or 9 months, right? So you can start with that. But again, you're showing long-term relationship. All right. So you may not do a CD. You may use a money market account. All right. Now, in terms of people like to go to Navy Federal, in terms of open up their accounts and stuff, again, you have the personal account, savings account. If you have bad credit, then you're going to go with a secured card. Then you're going to go with a secured loan. All right. Then you want to do with the CD and a business bank account. Now, there's one other key component that you have to understand with this here business model that most people are not aware. And that's your NAICS code. All right. So in terms of, since you're in the Instacart industry, then you want to go with a delivery. I don't know what's wrong with my spelling today, but you want to go with a delivery type of business. All right. The reason is because it's more of your safer delivery. Also, that delivery business, again, not only Instacart, you have other companies you can sign up with, but you're going to be signing up with your EIN. Most people, when they start with delivery business stuff, they'll get on the app and they start with their SSN. This is why that income will jump up and you end up possibly paying more in taxes because you got the side hustle plus the job and you're bringing all this income together. So now you're looking at, well, it's not worth it. It's not that it's not worth it. It's just because you're operating and you're starting the business wrong. All right. So for those of you that may have questions on how to properly set up your business structure, to picking the right NAICS code, how to remove negative items off the credit, how to get access to business funding, even more business funding or personal credit funding, click the link in the description. Schedule a one-on-one consultation.